Hello, everyone. This is Brett Stuart of Global AgriTrends. I'm excited to speak to you today on behalf of the University of Idaho with their annual Ag Outlook Conference. So let me turn on my slides here and we'll get started. So I've got a big story today, and I'll just tell you, our firm, I'm based in Preston, Idaho. Our firm conducts global agriculture analysis around the world. I've been doing this for 20 years. I've been doing it for 15 years with this company. We started this company in 2006, but it's been interesting. So my job is to try and keep a pulse on keep a finger on the pulse of the global markets. And I do that through a lot of data. I analyze way too much data. I build too many charts, as you're going to see here in the next 45 minutes or so. And I rely heavily upon a global network of contacts around the world to try and keep my clients advised of what's happening in these global markets. I've been traveling around the world for years. It's been a fun job. It's taken me all over the planet. And as a kid who grew up on a cattle ranch, I kind of have that heartbeat for agriculture. It's always been a passion of mine. And so it's kind of fun to look at it through the lens of the global markets. And so today, boy, with everything we have going on, I'm going to talk a little bit bigger picture. I know before I've talked more about Idaho and Idaho markets, I want to talk here today about just this big picture environment that really is driving all of our commodity markets. And you'll see what I'm talking about, the world's largest macroeconomic experiment. And then we'll talk a little bit about some of these external drivers, COVID, China, a list of other issues. And then I thought for the group today, I do a lot of work in beef, pork, and poultry. And I thought for Idaho, I'll give you a little bit of an outlook of what I see happening in the beef and cattle markets here into 2022. So in one picture, I'm going to show you, this is the world's largest macroeconomic experiment. You can see that political cartoon, right? The fire bombers flying over, the wildfire is actually COVID. The plane is Congress. And the two voices in the cockpit, one says, hey, that's a strange looking fire retardant. The response is, it's money. And so as COVID hit clear back 2 years ago, 2020, not just the US, but the global response was pour money on this problem. And here's how this is the biggest experiment in history. Take a look at the US money supply. So from 2019 October 2019 to October 2021, in 2 years, we increased the US money supply by 40%. A 40% increase in 2 years. That is unbelievable. I would suggest that 20 years from now, students at the University of Idaho that are taking Econ 101 are going to be reading about 2019 and 2020 and talking about whether it was a good idea or not to expand that and how that changed our economy and our financial system for generations. We don't take money out. We're not going to go pull that money back out. You can see what this line does, right? But we really goosed the economy. And so now we're in a commodity supercycle. It's driven by stimulus, not just the US, but global stimulus. 10 trillion was announced within 4 months of the pandemic back in 2020. That cash flows out across consumers. It overloads demand. That overloaded demand overloads the supply chains. We have West Coast port issues, container shortages. Now we've got soaring labor costs, fuel costs, electricity costs, fertilizer cost, even glyphosate. And this thing gets scary, right? When we start talking about potential fertilizer shortages, glyphosate, that is a very concerning situation. I read a report a couple months ago. It said the world population would be half of what it is today without fertilizer. Fertilizer, we can go without some things, we can't go without fertilizer. So the question becomes, this big inflationary environment, when does this end? I would suggest look further than you think. We don't take that money out. Now, That being said, here's how inflation ends. And the Fed chairman for a year up until 2 weeks ago has said, inflation's transitory, don't worry about it, it's going to end. The way inflation ends is we only track it on a 12-month basis. So now when diesel's $4.20 a gallon, that's a 45% increase. A year from now, when diesel's still $4.20 a gallon, it's a 0% increase because we're only comparing back 12 months. So as we move through 2022, one of the things you're going to see all these inflation numbers reset to zero. And there are going to be people that say, look, inflation's over. The reality is diesel's still going to be $4.20 a gallon. And so the whole idea of inflation, we only compare a 12-month. We are moving to a new and higher level, and we're going to be there for a long time. So how does it end? Is it a soft or a hard landing? And who knows? I would suggest that without some major event, a major terrorism event or something like that, I think it's going to be a soft landing. I think this inflation is going to weigh on us. It could carry us into stagflation, which is just inflation with a slowing economy. I think that'll happen. I don't know if it'll happen in 2022, but I think that's the road we're headed on. As I said, I think inflation is going to run hotter and longer than we think. And I would say it's going to be a bit of a soft landing. So here's what that stimulus has done to the global agriculture index. This is a global food indices from the United Nations Food and Ag Organization. Look at veg oils. And I can go back in this data set a long time. I kind of zoomed in so we could see 2021. Veg oils always go hotter and higher than everything else. Look at meat. Meat was lagged by almost a year. We saw grain prices go up, food prices go up, everything. And finally, the meat prices go up. My work is in the protein space. Now, meat prices have taken a dip there. Don't be too concerned about that. That is simply the devaluation of the Chinese swine herd. China has half of the pigs in the world, and they've dropped in price from January. They've dropped 60%. And that's due to oversupply because of their disease issues. We'll talk a little about that. But the meat prices are not going down like that would suggest, especially when you look at US prices, especially beef prices. We're not expecting those to go lower. So if we look at total inflation, and I just looked at this chart. This is price inflation from now back through August 2020. The title says 2021. I forgot to change that. It's through 2020. So we're looking at about 15 months of inflation. Beef price is up 34%. Our steer price is up 30%. You would normally say, hey, that's a fantastic year. Yeah, but diesel's up now 54%. Gasoline, corn, fertilizer, natural gas, steel, everything you buy from the store is going through the roof faster than at least beef and steers can keep up. And I'm glad to see what's happened in the milk futures this last week, because the poor dairy industry has been the lone left out in the cold industry in the agriculture basket here. Cheese down 22%. Dairy has sat by and watched everything go to the moon with no real lift. Now, we'll see what's going on in dairy markets. I think there's room for optimism as we go into next year. Like I said, take a look at your class 3 futures market. We're up over $19, $20 milk now. And so they've been late to the party. I hope they get a piece of this. The game is now, how do you manage cost and how do we keep revenue going up and even try to hope that we can keep pace with inflation? So let's talk grain prices. Here's a world chart, world prices of corn. And we've seen that US and Brazil corn price, they spiked over the summer and then they both dropped. Now keep in mind, China is the biggest corn importer in the world. And look what their corn prices have done. They're still almost $11 a bushel. They're the big buyer. They bought 28 million tons of corn a year ago. They're on pace to buy about 28 million tons this year. Before that, they used to buy 3 million tons a year. So don't be lulled to sleep by cheap corn, or it isn't cheap corn, but what we thought was cheap corn compared to last summer. China's still out there and they're buying. Just in the last week, they've made some big purchases out of Europe and some other countries. I don't know what's going on with China corn. They've liquidated a huge portion of their swine herd. They're claiming a record crop, yet their prices won't go down and their quietly out there on the global market, snapping up everything they can get. I don't think there's a chance for grains to go much cheaper. We'll see what happens with fertilizer. On this US economy, the party doesn't end till the money runs out. Cash is everywhere. 3.5 trillion in checking account balances. That's 4x what it was pre-COVID. 4 times the amount of cash in checking accounts. Now, keep in mind, 65% of that is held by the wealthiest 10%. But consumers in the US have never been better off. Now, the problem with this all is, take a look at this. Consumer sentiment's not great. Consumers aren't real excited about this. They should be thrilled, right? What happened? Everybody got stimulus checks. That was really exciting. Everybody had this newfound money. Now, what are they saying? Well, wait a minute. What's our gas price doing? What's our housing price doing? Half of the consumers surveyed in this survey said, we think we're going to have reduced real income next year. Inflation adjusted income is going to be lower. So even though we've got more cash in consumers' pockets than we've ever had, we're at a 10-year low on consumer sentiment. I think that's interesting. Homes, vehicles, durables were all reported more frequently in any other time than any other time in more than half a century. Consumers aren't being fooled. They know what's going on. So then our Fed chairman comes out and says, oh, wait a minute. This is right after he gets confirmed for a second term, after all summer of saying inflation's transitory, don't worry about it. We're way more worried about employment. He gets confirmed for a second term and comes out and said, oops, I was wrong. And we've got to retire the word transitory is what he said. Inflation's real and it's more than we thought it was. I think there were some politics involved. He's now saying, we've got to start to taper these bond purchases. The Fed is buying 250 billion a month in bonds. That money is being pushed out to banks. Banks are flush with cash. They don't know what to do with it all. I've talked to a few bank boards recently. They said, we're trying to get consumers to take their cash out. We've got too much cash. I've said, hey, negative interest rates. They've done it in Japan and Europe. Who knows where we head? There's no returns out there on cash right now. There's so much cash. So Chairman Powell says we're going to start to reduce that purchase. Does that stop this? No, it just slows down the flow of cash that we have too much of. It's going to take more aggressive measures to slow inflation. Now, the other bullet in the gun of the Federal Reserve Board is interest rates. And that's how we did it in the 80s. Take a look at this. This is inflation. The inflation is the blue line. Interest rates are the red line. This is from 1970 to 1990. This is my childhood. I'm a Gen Xer. We brought to the world parachute pants, hair bands, Michael Jackson. You're welcome, right? Gen X. So this was the Gen X childhood here. So this is for my analysis. I don't remember what was going on when I was 10 years old when inflation hit 12% and interest rates hit 20%, 18% on the federal funds rate. But you can see what the Fed did here. If you look, as that inflation rate started to rise, they hiked interest rates right behind it, and they could not move fast enough. They ended up taking interest rates up to 18% to finally break that inflation. And it caused 2 recessions. So that's the risk here. Now, the problem is the one group that cannot afford an interest rate hike is the US government, the one who's in charge of interest rates. And so there's no way we're going to 18% interest. We would be absolutely insolvent. Not only are we're indebted to China, we're indebted to Japan, but really we're indebted to ourselves. We're selling ourselves those bonds now. The interest payments would overwhelm us. That being said, we're going to see interest rate hikes next year. Maybe a 1/4 point in the first quarter, maybe a 1/4 point in the second quarter. Somewhere here, the Fed's got to do something. Now, I think what that equates to is a BB gun. I think they're trying to shoot this hot inflation with a BB gun. I don't think it's going to slow it down. That's why I say I think inflation's going to run hotter and longer than most people realize, because we lack the ability to do now what we did back in the 1980s. So what happens as this persistent inflation continues? One, inflation turns to stagflation. That's inflation with a slowing economy. At some point, the money does run out. Consumers say, we can't spend money anymore. We've got to save money. Pretty soon demand falls and we have high inflation and a weak economy. It's a terrible situation. The second thing that happens is instability in the third world. The central banks in Africa have been raising interest rates all year. Remember Arab Spring 2010? I remember it well. I was in Morocco and Tunisia working on a project, and I was asking the consultant I was with, how does the common person buy bread? The prices are way too high. I could not believe how expensive food was. Within 6 months, the president of Tunisia was leaving the country on a helicopter, right? It turned them over. Food inflation is real in the third world. Here's just some quick math for you. A bushel of wheat will produce 70 loaves of bread. If you take the wheat cost pre-COVID, divide it by 70 loaves of bread, it's 9 cents. So your loaf of bread has about 9 cents of raw wheat in it. So you double the wheat price, what happens to our bread price here in the US? Double the price, it goes up 9 cents. So instead of $2, I'm paying $2.09 a loaf. Ouch, right? That's hardly noticeable to most consumers. If I'm in Africa or Indonesia or Latin America and I'm buying wheat for my family and the price doubles, we eat half as much. And so this is going to have a much bigger impact. It already is on the third world. So let's shift gears. Let's talk about COVID. We never can ever quit talking about COVID. And the latest variant is the Omicron. And who knows what the next variant will be. We don't know a lot about it. It's going to take time. I think within the next week, 2 weeks, we're going to know a lot more about the transmissibility, the virulence, and the protection by existing vaccines. Hopefully, it's weaker. And I would suggest that's kind of how COVID works. If we look at the COVID death rates, this is death per million people. And here you can see the 3 waves. One was March and May 2020. Then we had the year ago, November 2020 through January 2021 over the holidays. We had a big spike. This is Germany, US, UK, Mexico, France, and Canada. And then we just went through a big wave this summer, August to November. Now, who knows what the holidays do? Because it's hard to have a big wave and then another big wave. I would expect the holidays would increase that, but who knows? But you can see that this wave in 2021 is tapered. And that's probably due to vaccination, more exposure, more people have had it. Hopefully these variants become weaker. Now there's the cases. It's interesting. This is the death rate. This is the same time frame, and there's cases, the same country. And so cases don't necessarily mean death. And cases, we've got a lot of vaccinated people that have cases. They're not severe. The case data is far less significant than the death rate. The problem is all we hear about is cases in the news. Forget cases. Cases are going to be more mild. They continue to be more mild. Vax rates, here's the global numbers. China's now 76%, India 27%. You can see what's going on around the world. 2021 had a lot of vaccine spread early on in the US. It came later to the rest of the world. So in countries like Korea and Japan, they didn't get the vaccine till late 2021, not in big doses. So their economies were somewhat subdued in 2021. I would suggest they're going to see good growth in 2022 because those higher vax rates. Both Korea and Japan are approaching 80% now. US is stuck at 59. We've been at 59% for a month. And the harder the government tries to tell us all it's required, the harder we fight back. Every red-blooded American, me included, doesn't want the government telling me what I have to do. And so the US is going to lag in this, even though we've flooded with vaccine. A lot of these countries are struggling to get any vaccine. So I think what we could see in 2022 is some of these lesser markets could see the economic boom that we saw in 2021. Bottom line, COVID's going to continue to drive these global markets for years. 1, because of the virus. 2, because of the effect with stimulus. That's going to carry on for years. So next topic, China. Crazy, huh? I've been traveling to China for almost 20 years. I think 19 years ago was my first trip. I don't know how many times I've been to China. I haven't counted. But I've tracked all kinds of issues and the problems. I've traipsed around farms from up near the North Korean border to down in Guangxi near the Vietnam border. I've been inland to Chengdu. I've been along the coast, Shanghai. I've taken trains. I've been lost in airports. I've eaten everything from pig intestine to scorpions. It's been fascinating for me. I don't know if it's always been pleasant, but it's been fascinating to try to understand China from an agricultural standpoint. That picture on the right there that just popped up, that was the last trip I made to China. That was in May of 2019. That was in a restaurant in Shanghai with two Chinese meat importers, analysts, and Raphael from Uruguay. And the four of us went to this restaurant. We ordered a $200 tomahawk ribeye. It was 4 inches thick. It was Australian Wagyu ribeye. It was unbelievable. And the chefs cut it all into pieces. They even cracked that big long rib bone in half and brought it out so the Chinese could eat the marrow out of it. These guys thought it was just high heaven to get beef like that. Beef is the new thing in China. About 5 years ago, everything changed. For 15 years, I'd go to China, I would eat boiled beef. It was always hot pot boiled beef. You go into those tier 1 cities today, every restaurant is grilling beef, and that's all got pictures of white fat beef in the windows. They don't all have white fat beef, but they all want it. And so the beef thing in China, it's tip of the iceberg. It is a wave that's going to continue for years. But after I took that picture, after we had lunch that day, I jumped a train. There was a swine conference I was trying to get to. I was trying to track the Chinese meltdown of African swine fever that was decimating their swine herd. There was a conference in a city I'd never heard of before. The city was called Wuhan. So I jumped a train in Shanghai and ended up in Wuhan, China, actually about 6 months before the pandemic started. And I don't think I was patient zero. I think I got in and out before all that happened. But China is now driving everything. And like I say, I've been watching this for 20 years. Now look at where corn was, Chinese corn imports 10 years ago. They weren't even on the radar. 5 years ago, they weren't even on the radar. China is now the biggest corn importer in the world by a margin, and they will be again in 2022. Same story with soybeans, biggest in the world. With wheat, they're number 3. Last year, or 2021, they're number 2. They'll be number 3 next year. Global beef, 10 years ago, not even on the radar. Today, 2 times the largest beef importer in the world. They're driving global beef markets. Pork, same story. These are 10-year charts. These aren't 50-year charts. China has taken over the world in agriculture. Chicken, 3 years ago, not even in the top 8. Today, they're number 2. So you look at this, you can look at those charts and go, China has taken agriculture by a storm here, and it's not going away. It's really driven by rising incomes. It's not rising population. Their population is stable, 1.4 billion. But what's happened is they have moved 300 to 500 million people into the global middle class. They've got another 300 million to go. So that middle class consumer in China is bidding away beef today from Brazil. Brazilians can't afford beef because they're selling it all to China. It's incredible. So what about the US? Here's our ag exports to China. Remember Trump's phase 1 deal? Did we make it or not? No, we're not going to meet the commitment. The commitment was 37 billion. But look what phase 1 did. It threw the gates wide open for US beef and a whole host of other commodities. We hadn't shipped beef to China significantly for 13 years from the US. Phase 1 said every USDA plant can ship beef to China, and we're shipping like crazy today. We're going to ship 33 billion of US agriculture to China. I would tell you this chart is going to continue higher. Politics be damned. China's demand is growing, and it's growing from a hungry middle class. We're going to send more of probably everything to China. So China, what's really driven their protein markets, in 2018, they found African swine fever. It's the worst hog disease in the world. It's 90% fatal. There's no vaccine. And through 2019, they killed 65% of their swine herd to try and stop the virus. It wasn't enough. But what that did, it caused China to go from importing 700 million in meat and poultry a year to importing 2.5 or a month, 700 million a month to 2.5 billion a month. And what's crazy is they oversupplied the market. They've driven hog prices back to the basement, and they're still importing $2 billion a month. They're still importing 3 times as much pork, even when their prices have completely collapsed. So that pork market is driving the global protein market. And there's the roller coaster. They went from 54 million tons a year. 2020, they were at 31 million. I think 2021 is going to show an increase because they've been liquidating for 10 months now. They're still going to import 4 million tons of pork. This market's not going away. They're going to have volatility. They still have the virus. They can't control it. And they've now built these mega hog hotels. They have 26-story high-rise buildings full of hogs in a country that's got more swine diseases than any country on earth. It's, like I say, it's been fascinating to follow this. Who knows where they're going, but the reality is this has changed the global meat markets. Between the revolution of beef consumption in China and their African swine fever issues in pork, they are going to buy more and more protein every year. So let's shift gears. Other risks and issues. I'm just going to hit on these. Labor. My clients all over the world, the number one complaint they have is labor. What are we going to do this week? How do we get cattle fed? How do we get hogs killed? How do we keep the plants running? Logistics. Can we get our containers here? Can we get our raw materials in? Can we get containers to get product out? African swine fever. I mentioned what it did to China. In August, that disease was found in the Dominican Republic and Haiti. It's now on the US doorstep. If we find that virus in the US, it will ban all US pork exports overnight, and we'll have 25% too much pork in the US markets. Hog futures limit down, maybe for weeks. Cattle futures follow. African swine fever is a bad disease. Now, 2 months ago, we had 14,000 Haitians in Del Rio, Texas. They came from a country with that virus. If they brought meat or sausage or jerky with them and a wild boar in Texas eats it, it's game on. And so that's something to watch. That is a big event that would crush our US protein markets. Russia's military buildup, 175,000 troops on the Ukrainian border now. Russia has all the reason in the world to do this. Europe cannot oppose them. Europe is now dependent on Russian gas. This could be interesting. The Ukraine is the number 4 corn exporter in the world. They're also the number 4 wheat exporter in the world. Fertilizer shortages. You've all seen the news. You're seeing the prices. 80% of the cost of nitrogen fertilizer is natural gas. The Europeans are in a major natural gas shortage. That's why they're begging Putin for natural gas right now. Look out. We'll see where fertilizer goes. Drought risk. We all know what that is in Idaho. Take a look at this. Here's the US drought monitor. There's where it is currently on the left, December 7th. There's where it was a year ago on the right. Does Idaho look better or worse? Not good, right? We need snow and lots of it. In Preston this week, we got about, a quarter of an inch of snow. It's the first snow we've had this year. We're hoping snow and spring rain, desperately needed. We've seen what's happened to the hay prices. So what does drought, how do you forecast the drought? Who knows? Nobody knows. But I've got a consultant that's fantastic. He's a retired meteorologist from Creighton University, Dr. Art Douglas. And so Art and I have talked extensively, and this is one of Art's key forecasts of long-term weather, the La Nina. You've all heard of La Nina. Now this chart here looks like a tie-dyed t-shirt. It's not. It's a map of the world. The continent, the land is gray. The oceans are the colors. The colors are the sea surface temperature anomalies. So red means that ocean is warmer than it was a year ago on the surface. Blue means it's cooler than it was a year ago. or not a year ago, than the average. So that square right in the middle of the chart, that's the equator. That's the Pacific equator. The Pacific equator, cooler than average, means less evapotranspiration. That's something that Dr. Douglas taught me. Less evaporation. So if that equator's hot, you get a lot of evaporation. That fuels the US jet stream. Right now, we're still cool. That can change. It can change in 2 months. But where we're sitting right now, this doesn't look good for our winter snowfall in Idaho. The equator is still cool. Look at South America. That jet stream that brings moisture across Brazil and Argentina, it's cool water off the West Coast. That lends to a drier South America. So we're in a situation right now. If this continues the next 3 or 4 months, we're going to be getting less than average moisture. It also means more rain in Australia. It's the opposite for them. So we'll see where this goes. You got to track this monthly because it can change. So let me shift over. So that's the big picture of what's going on in the world. That's the stuff I follow day by day. But being an Idaho outlook, I wanted to talk to you a little bit about cattle and beef. And I'm a beef guy at heart. I grew up on a cattle ranch. I've worked in the Midwest, traded fed cattle, worked for beef companies, traipsed around the world eating strange beef. So what's going on in the beef market today is incredible. And I'm not talking the US beef market. I'm talking the global beef market. Take a look at what I'm talking through here. Brazilian slaughter is lower and their herd will decline this year. That hasn't happened in 15 years. Why? Chinese demand for beef drove them to aggressively slaughter both heifers and steers. Their agreement with China is their cattle have to be younger than 30 months of age to qualify for China. In Brazil, those grass-fed steers, on average, they're 44 months of age when slaughtered. China needs more beef. They keep sending bids to Brazil, need more beef, prices go higher, higher, higher. Brazilians start killing their heifers and their steers to supply China. They've mined away their herd. Then, after taking 80 days to confirm their BSE cases, China's now suspended Brazilian beef imports. The biggest beef importer in the world just banned the biggest beef exporter in the world. And US pressure is now mounting to suspend Brazilian beef. With China out, the US is now the #1 buyer of Brazilian beef. It's about 10% of our imports. And we're talking about banning them. This is huge. Now, if Brazil decided to expand their herd, they would hold a heifer calf in 2021, to be bred in 2022, to calve in 2023, to produce a 4-year-old steer, 3.5-year-old steer in 2026 to 2027. You cannot turn this ship around for years once you shrink the herd. That's where Brazil is. Let's look around the world. Australia, production and exports are both down 20% right now. Drought recovery and expansion, the La Nina brought rain to Australia. After 8 years of drought, they've got rain everywhere. They're trying to expand their herd as fast as they can. Their packers are losing $300+ a head because the heifers are all going out on grass. Their shipments of beef to the US are down 44%. Argentina, their production's now at a 2-year low. They've been exporting aggressively to China. Uruguayan slaughter hits a 1-year high. China's now pulling as hard as they can on Uruguay. They're slaughtering more than 50% of their females in Uruguay. What does that do? Pretty easy to see what that's going to do. You kill more than half of your, or if your slaughter is more than 50% heifers, you're not going to have heifers to keep to build your herd next year. Their herd is going to shrink as well. The Canadian beef herd is going to contract further into 2022. They've taken out 44,000 beef cows in 2 years. In the last 15 years, the Canadian herd has shrunk by 1/3. The US beef herd, we were down 2% in July to beef cow numbers. Our beef cow slaughter is up 9%. So do the math here. What am I telling you? Global beef supplies are tightening significantly. Here's what the WASDE report shows. The WASDE says we're going to have 800 million pounds less beef next year in the US. That's a 1.6 per capita decline in pounds. We're going to lose 1.5 pounds for every man, woman, and child in America in 2021 on beef. It may not be enough. It may be bigger than that. Our beef heifers also down 2% on that inventory report. The expanding drought is what's driving the cow slaughter. That and expensive hay. And in Idaho, you've seen what hay's done. Nobody wants to keep an open cow this year. We've seen even the bred cow prices drop. So the US herd shrinking, around the world herds are shrinking. What about demand? Beef exports soar. Beef exports are up 21% now from the US. We're now exporting 20% of our production value. We're exporting 10% of production, 20% of our value. We're on track to export $10 billion of beef this year. I started this business 15 years ago. I'd have to go back and look. We were not exporting much beef 15 years ago. Incredible what we're doing today. Exports to Asia up 24%. The Western Hemisphere up 13%. The CAFTA DR, that was the Central American Free Trade Agreement. 15 years ago, we signed it with 15-year phase outs on the tariffs. So now they're duty free. Korea up 15%, China up 700%. All while global COVID recoveries remain delayed. What's made all this happen? Partially demand, but partially trade deals. We have a new Japan agreement. We have a new Korea agreement. The Korea agreement takes beef tariffs from 40% to zero. By 2026, we're going to pay 0% duties in Korea. I remember going to Korea, analyzing that beef market, talking to traders when we paid 40% tariffs, or they did, on our beef. They're going to be at zero in the next 5 years. NAFTA, the USMCA, no real change there. We're tariff free. CAFTA DR, if you put those countries together, it's like a new mini Mexico just to the south of us, tariff free. The real driver of beef demand is China. And there's that hot pot. I told you about hot pot. For years, I'd go over there and any beef I had was boiled. I said, that's offensive to me and every red-blooded rancher. Don't boil your beef, you got to grill it. And then again, the grilled beef market takes off. So China now, they have imported $10 billion of beef this year, 2 million tons. It is shocking how fast they took the global beef markets. This thing would go up faster if there was more supply. There's just simply no more supply. They've banned Brazil. Look at Brazil. That's their biggest supplier. Who knows what's going to happen in 2022 if Brazil stays banned? The Chinese beef prices just keep going higher. The average market price of beef in China last week was $6.05 US per pound. We're at $7.55 a pound. They live on 1/6 of our income. They're paying $6 a pound for beef. So China will continue to drive this market. So the question I get when I talk to cattle guys is, what are calf prices going to be? And again, I'm not psychic, but let me show you this chart. This is a chart that correlates the fed steer price and calf prices. Fed steer prices on the left, calf prices. This is a US average annual price. And you can see the different ranges. Everyone remembers 2014-15. That was driven by a very tight global supply. That was awesome. It was unbelievable. $3 calves. I saw calves go for $3 a pound that year. So that's on average, the fed price versus the calf price. And corn can play into this, right? If you're buying calves and finishing fed cattle, high corn penalizes the calves a little bit. But if we look and say, what's a reasonable guess for what we're going to be seeing by fall of 2022, we can look at the live cattle futures, and they're telling us that that fed cattle price is going to be up there above 140. So if we go up there above 140 and we run across and I say, okay, we're going to average 142. That's my guess for 2022 on fed cattle. Futures aren't quite there. There's a couple months hit 142. I think we're going to average 142. I think we're going to be above that some months. A 142 fed cattle market puts calves right around 225 a pound. That's a good price. Now, I showed you the inflation. We know what diesel's done, steel has done, corn's done, hay has done. Calf prices are going up. The question is, are they going to go up enough to keep pace with inflation? I would tell you that globally, the trade winds are blowing in the sails of the beef market. Beef has a good chance of keeping pace with inflation just because of what's happening in the global markets. So there's my guess. I don't know if I can call that a forecast. That's a guess on calf prices. But $2.25 on a US average price, that means your good calves here in Idaho in the fall, 230 plus, maybe 240. I don't know. We'll see. We'll have to see. And this is barring we cannot have an African swine fever outbreak. That will crush our market. Again, that virus is bouncing around in the Caribbean basin. A lot of big moving parts. So let me wrap up with this. Global demand. This is what I do every day. I analyze global agriculture prices. I see what's happening in Brazil, in Australia. I don't follow the US markets near as closely as I do the global markets. But in that analysis, I put a model together and I scatter plotted meat and poultry consumption globally in tonnage against global GDP. And 49 years of data has a 0.99 square R square. That means degree of correlation. It's almost a perfect correlation. More GDP equals more consumption. Pretty easy, right? That's a pretty simplistic model, but it's been very accurate, 99% accurate for 49 years. So if you want to know how much meat and poultry we're going to need next year, tell me what GDP is going to be and I'll tell you. Now, the IMF and World Bank put out a 10-year forecast of world GDP, and that's the yellow dots. So if I take those yellow dots, and if you look, the dots are getting further and further apart on that line, meaning demand is growing faster. What that tells us, by 2030, we're going to have 37 billion more GDP. That's going to generate demand for 78 million tons more meat and poultry. That's a 37% increase from 2020 to 2030. The last 10 years, we grew about 59 million tons. So that tells me we better gear up for growth. And I know our cow herd's in decline. Our swine herd is smaller. Feed's expensive. But this tells me the world is going to need more. And I'll just leave you with this last chart. Out of the millions and millions of charts I've made, this is probably the most interesting. World population. By the year 1800, we had not yet hit 1 billion people. We're at 7.6, 7.7 billion today. We may need more food the next 150 years than was consumed in the last 7,000. That's staggering. If there was ever a time to be in agriculture, right now is a fantastic time to be in agriculture. This is really a chart about food more than a chart about people. So with that, I'll go ahead and wrap it up. I appreciate being able to participate in the conference here today. And don't hesitate, shoot me an email if you have any thoughts, questions, or have any interest in subscribing to our services. Have a great day.